Volvo Cars is looking to an all-electric future with its eyes firmly on 2030. The company owned by China's Geely Holdings announcing today that it will phase out any car with an internal combustion engine, including hybrids, in the next 9 years. The company's also shifting its entire operations for customer service online. Let's bring in Anders Gustafsson. He's the president and CEO of Volvo Car USA. Anders, it's great to have you on. This is certainly a very aggressive target, far above a lot of the major car makers in terms of the next 9 years to go all electric. Walk me through the timeline. Why 2030?
It's really following our cycle plan and our priorities in the company. We have decided to put all our efforts into a growing segment, and that is electrification. And also we see a by far higher demand, and also we see support for electrification, especially in the US.
I wonder too, to me, navigating all this right now, there are a lot of options out there, whether people want to go EV or, combustion engine. But I feel like the decision to put your car sales online also by 2030 is pretty big. Talk to me about where that came from and how much of that could have stemmed also perhaps from the fact that Tesla has seen such success with that.
It's a kind of a combination. First of all, of course, you need to have a plan for this and take it in steps. We started last year with a very aggressive PHEV strategy focused on the West Coast, where we have the highest demand. And just after 6 months, we found out that the demand is really in all the three regions we have in the US, both the West Coast and the Southern region and Northeast. So we see a by far higher demand. That was one of the ingredients in being so bold with the numbers. Then we, of course, today we launch a new car, our second full electric car in the US market. But the most important thing is what the customers are asking for. Just to clarify, we will do this together with our partners in US, but we will take away the unhealthy part of our business. And that is that we normally have a by far higher production capacity and we have demand. And that's the whole change in this structure, that we will not sell from a stock that is controlled and owned by our partners. We will take care of that. And then we will work with an online tool to make sure that we have the right products in our stock, and also in our production capacity structure. And that is the kind of a golden thing to fix in this industry, to maintain a good value, but of course, give the service that the customers are asking for now. And that is really online.
Anders, what does this all mean in terms of employee headcount? Does anything shift as a result of some of these announcements you made today? Number one, in the shift that's happening on the production lines to go all electric, as well as shifting to all online?
Well, I would say it's different kind of competences that we need in the future. And we know that. And we started that transformation a couple of years ago. And in the US operation, we are very lucky. We have had 100% growth the last 5 years. And we are planning for another 100 the upcoming years. Just in February, I think the numbers are going to be announced in a couple of minutes. We have a growth of 17% in February and 20% year to date just in US. And that is the base for what we plan for. Our plant in Charleston is just building a great sedan right now. But the biggest kind of a locomotive in the US market is the XC90. And that is going to be produced in Charleston. So we will go for a quite low production capacity to highest capacity ever on the US market. And therefore, my answer is that we need to recruit more colleagues, more resources. But of course, we need different competences. And that's the reason why we have our own university, and also the reason why we educate our partners so they can take the next step together with us.
When you say you need to recruit more, how significant an increase are we talking about?
If we take about in numbers, in Charleston, where we have our plant, we need to double our size of the operation right now. It's really triple the size of the operation. From a headquarter point of view, it's, of course, more digital competences that we need. And then we have the software development on the West Coast, where it's a little bit easier to recruit right now.
When it comes to kind of the reason for going so big on this announcement to really target 2030, which is a lot quicker than a lot of other traditional manufacturers out there, are you looking at them being the competition here in this game of catch up in the EV space? Or are you more trying to do this so you can really take some share away, start to take share away from some of those other EV companies like a Tesla?
I think we have learned in life that you need to be focused. It's very, very tough to be kind of a number one or be good at two tasks at the same time. So that's the reason why we leave the development of combustion engines and go for full focus on all our engineers into electrification. It's easier to recruit, it's easier to attract the spearheaded talents because it really fits together. This is a very, very competitive industry. We are a great company. We have great values, and that is the kind of a platform to recruit the best engineers and hopefully some of the digital colleagues too. So this is going to be a battle, but we are good and we have a quite good track record. So now it starts.
Anders, I wonder if you can speak to the demand in the market. It's been incredible to see the big tide shift over the last year with Europe becoming the largest market for EVs, but that was largely attributed to the government incentives that were much more aggressive. We've sort of seen the same story in China as well. When you talk about going all electric and being able to maintain the demand, can you do it without government incentives in place?
I think our normal answer is that we cannot run our operations based on support from governments. I think they should help us with the infrastructure of charging. There we've been very, very clear that we need help. And I think that they will do their part. That is at least my personal reflection after dialogue with them last week. And then we will handle our business model. To be competitive, you need to work with the efficiency. You need to reduce selling cost. And that's the reason why we're so focused on online. And that's the reason we are so focused on getting closer to the transaction, not to control it, but to plan a little bit faster than we can do today.
It also seems like it might come with a trade-off here too until 2030. What kind of calculations went into that in maybe the negative impacts that might come from someone who might be considering Volvo and say, well, if they're going to be shifting to electric, maybe my gas-powered car or service might not be top of mind in the interim?
Yeah, I would say let's see. We are quite convinced, and it is 9 to 10 years. And the cycle plan that will benefit US is, of course, a supportive decision to achieve that number for the operation I am responsible for. And I think that we have been very transparent towards our partners. They believe in this strategy too, even if they are very, very afraid of when we use the word control and so on. And that is not what we aim for. We just like to utilize the information, plan our business, and also make sure that we go away from this push mentality that exists in this lovely industry.
And Anders, finally, an issue that every car maker is dealing with right now, the global chip shortage. You've had to halt some of the output over in Europe as a result of it. What does the pipeline look like for you right now, and how significant are the delays stemming from this?
It is a quite critical and very strange situation. We have been extremely lucky and of course good players that have luck. So a lot of kudos to the purchase department. We've been able to run the operation in a smooth way. I know kind of a cars I have on the ships on its way to US. It's 6 ships right now with around 10,000 cars. And that is, we need more ships quite fast. But right now what I see in our fabulous systems is that it looks good. And we will be able to ramp up the volumes that goes in line with the 17% growth that we had in February. So right now, looks good. We monitor it 24/7. I'm a little bit nervous, but right now it looks good.
As long as it looks good. Appreciate you coming on here to chat with us on all those things. Anders Gustafsson, President and CEO of Volvo Cars USA. Thanks again.